All right, good day, everybody, and welcome to the Client Support Webinar for May 10th, 2023. Great to have everybody here. And like I always say, this is your webinar, okay? This is one where you come and can ask questions. If there's no questions, I usually have some form of a topic to discuss. And today, actually, we had a lot of emails come in requesting more information on what we call points of inflection. So I'm going to cover that today as well. All right, Gene, I know you're here, so if you have anything you want to add in here, jump in.
Well, welcome everyone, and maybe to get things rolling, if you could all just type hello or just yes in the questions area, that lets us know you can hear the audio and see the webinar screen. So give us a hello in the chat or the questions area now. And while you're doing that, I did want to mention, Bennett, that we have a great event. Actually, I just realized Stock Analysis Fridays we're skipping this week, but the following week we will be doing it. So hopefully you all have been joining us for that. And I guess without further ado, then I'll turn it back to you, Bennett.
All right, great. Yeah, we're going to be away this Friday, long weekend. So we're going to pick up Stock Analysis Friday the following week, the following Friday. And also, too, I always like to shout out to our newest software purchasers. And John Blair, I'm glad to see you're on board. Great to have you here. All right, so welcome, welcome. If you have any questions on what you purchased, feel free to ask. Stephen, hi, how are you? Good to have you here as well. All right, another announcement I have today is those that are Oracle subscribers, we have a very detailed market analysis subscription called the Oracle Inner Circle. And basically we meet once a month to discuss the markets. I go over what I think is going to happen, as well as how to protect yourself if it's a sell-off, how to actually gain if it's a uptrending market, and things of that nature. So we're going to have that today at 2 o'clock. Normally we have it on Thursdays, but this month we're having it today at 2 p.m. So if you're an Oracle subscriber, be sure to be there. And then finally, all our client support webinars are recorded and they're hosted on our YouTube channel. And our YouTube channel has a special link in the Customer Hub area for you to access this, because these particular webinars are kept private from the general public. So you have to have a special link located in that area where you log in. We call it the traderscoach.com portal or client area or VIP area. And that's where you need to log in to get that link. And it's right there on the home page. We also too welcome you to subscribe to our channel. And Gene, when you get a chance, why don't you just put the link up to our YouTube channel, because we do Stock Analysis Fridays every week on Friday. So that's something that may interest many of you. It's almost like a stock picking service because we always find a few good ones. All right, let me go through some administrational things and get that hammered out and out of the way first. So first thing I have to go over are the risks involved in trading. There are risks in trading. We deal in a realm of probabilities, not certainties. Past performance does not guarantee future performance, and hypothetical or simulated performance results have certain inherent limitations. Fills may not be perfect and things like that. Also, we're going to be possibly looking at stocks or certain ideas, and we want you to run those by your financial advisor or money manager to be sure that they're suitable for you. We don't know your personal situation, and there's many factors that come in to determining that they are experts at. Things like your age, your short and long-term financial commitments, tolerance to risk, etc. And then you want to be always trading with money you can afford to risk, called risk capital. And then also too, make sure you know how to do risk control on each and every trade. That's determining the proper trade size or position size, or also known as your bet size on each particular trade you make. And if you need help with that, of course, we can come to the rescue with that with our Money Management for Traders book, second from the right. New book last year, great book. What I did is took out the information on my more comprehensive and much longer detailed book called A Trader's Money Management System, stripped it down and and made a nice, easy to read, easy to implement, basically the finer points of money management for traders. And that's that second book from the right. Very inexpensive. You can get it in Amazon or order it right from our website. So that is available. Also, too, very excited about our new Art of Trading book. My publisher, Wiley Trading, contacted me last year and wanted me to do a new edition to our 2008 book on the Art of Trading. So I was pretty happy about that because there's a lot of new stuff I wanted to put in this book. So it's going to be in that book, as well as information on our newest and latest software since the previous book. And then I have a book on Elliott Wave and Survival Guide for Traders that is also very popular. All right, when we look at charts, we're going to be using our software. And this is software I've developed over the last 30 plus years trading the financial markets. And we have software up on the upper row. That is our charting software. And then we have software in the middle, which is our scanners. And then we have software at the bottom, which is our risk control software. So we try to cover the major portions of being successful in this business. And these three sets of tools do a great job at it. You can buy them all at once as a bundle and get a discount, or you can buy them a la carte, whatever suits your fancy and your budget. But you can check out more about that on our webpage. All right, let's come out of here. I want to cover a little bit about inflection points, since I've been asked that. This is TradeStation up here, but we also use Ninja Trader and all sorts of things. So let me just talk a little bit about inflection points. Inflection points are kind of cool. And basically, anytime you have a movement, whether it's up, or I'm going to split the screen like this, or down, all right? Anytime you have a big movement, which is kind of like an impulsive wave or a trend in one direction, you usually get some profit taking or breathing in that particular trend. And so it's not uncommon for you to get a pullback on an uptrend and a pullback in a downtrend. And usually we use fib retracement levels to get an idea of the target range for where these things are pulling back. Now, we're not talking about Elliott Wave right here. We're just talking about most moves that we see in the market. And so usually inflection points, and I'm just going to put if there. All right, inflection points usually reside about anywhere from 38% down to 61%, which is the fib retracement levels. And that's usually the target of some form of inflection point. Normally, if you want to just draw a line at 50%, you could do that. But that usually represents normal profit taking, okay? Normal profit taking. And it doesn't necessarily mean the end of the trend, okay? It just means that you could have go down to the inflection point. And then at this particular point, we wait and see what the market's going to do. And, the market will tell us whether that inflection point is going to be met with more buying in an uptrend or more selling in a downtrend. So a lot of important information starts to align itself depending on which way the market decides it wants to move after hitting the inflection point. Now, it may go ahead after this and resume the trend, okay? And that would look something like that. I mean, you can see many, many instances in the market where you can recognize that kind of pattern, right? A lot of times, though, the beautiful thing about inflection points is this: you always have one, no matter what degree of the market you're looking at. So when you think about the most recent inflection point, guess what? After you've had a rebound in the market like this or like this, guess what? You have another possible inflection point. You take 50% of the distance between the new high and the new low. And then you wait to see what happens. Now, if it comes up here, bounces down, and comes down here, then guess what? That's a significant correction and possibly a change in trend. And if it keeps on going past the lower end of the major inflection point, then chances are you've got a downtrend in place. So you always have inflection points, okay? Think about it. Now, here's the next inflection point. If you get a bounce here, okay, and then it keeps going up past here, now you've got a situation where you have a new trend in place. So you should really never get left out of the trend using inflection points. Now, it's very possible this could have been an Elliott wave, an ABC, okay? But it also could have been a 1, 2, 3 in some circumstances. And if that's the case, it would have gone up to this inflection point and fallen back down. Same thing on a downtrend. The interesting thing is you'll usually see some of our pyramid trading points start to fill in and draw those triangular shapes in some of these inflection points. So always use inflection points. They're really a great way to figure out not only where to possibly put a stop, but kind of gauge what's going on. So if you think this is some form of a bottom, all right, and you have an inflection point there and it comes up to here, all right, comes back down, then that's obviously going to stop you out and there's a new trend here. All right, so always have your stops at the inflection points and that'll keep you out of trouble. Anybody use inflection points? Anybody use them right now? I use them all the time. Okay, quite a few. All right, good. So any questions on that? Yeah, there's inflection points at every degree of the market. So if you go up here and you start coming down here, then your inflection point is here. This is your major inflection point here. But then also too, sometimes you'll get some type of diagonal market where you get something like this and then you get a breakout, all right? So inflection points can also occur, correct, in a diagonal or sideways market. But they're fun, so practice those. I think you'll enjoy using those because they certainly can help. Cool. All right, so anything you want to look at today? Any stocks, anything that will help you learn how to use the tools that you're using? How many people are using NinjaTrader versus TradeStation? Always kind of interested in knowing what platforms are popular out there. Let me know what platform you're using as your primary platform. Okay, a lot of Ninja. Okay, good. Excellent. All right, cryptos. You want to take a look at cryptos? Okay, I usually take a look at the ETF on cryptos. And so with cryptos, what we've noticed is we actually like cryptos for a long position. You know, it was coming down for so long there. But now this is kind of this is a great point here, okay, on inflection points. So here's kind of a first move up, inflection point, move back up. Then you got the low from here to here, inflection point, and now inflection point. All right, perfect example of inflection points. So now we're going to see what this does. Is it going to go back into the target, or is it going to just keep and then go back up, or is it just going to go back up here? Okay, that'll be kind of an interesting thing to see. So we wait and see. Now, if you got in early, like we did for a long position, because we expect this to go way, way up, all right, when you have your first move up and a pullback to the inflection, as soon as you supersede the top, then that obviously is an uptrend in place. You can put your stop here, okay? You can move your stop up there with relatively a safe place to put your stop. Likewise, you don't want to move it yet, okay? Don't do that yet because you haven't gotten above the inflection point high. When that occurs, then you can move your stop up under here, okay? And that's if you want to stay in the trend, not necessarily all the impulsive waves, okay? Sometimes the impulsive waves will end and then you'll get an inflection point correction and then another move back up. So you've got to decide if you want to be trading something more of a longer term situation like we are in GBTC, or do you want to trade these short-term little breaths in the market, okay? All right, so we kind of want to try to be in this for a long time. So we kind of want to be very careful about moving our stops up because we don't want to use the pyramids because they're marking the impulsive wave, okay? They'll get you out on any move up on a trend, but if you're looking for a longer term high or target based on a larger time frame, you've got to either use the pyramids on the larger time frame or the lower inflection points. That's kind of something to keep in mind, but really helpful, okay? Really helpful. All right, let's see. Okay, you want to look at Amazon. Let's take a look at Amazon here. We looked at this just in our earlier webinar for Yummy People. We actually like Amazon, okay, right now. If you open up the weekly chart and you're into Elliott wave, okay, this is a beautiful situation. All right, so you had a 3 here, 4 here, hit the wave 4 target zone, which is really an inflection point of some degree. And now we're kind of pulling up, we think, into wave 5. All right, so that looks like a pretty good trade overall. And, you know, again, when you look at a trend, usually the steepest, most hyperbolic, powerful part of the trend is your wave 3. And you can see that the momentum peaked during that wave 3 time. All right, and that is characteristic of a wave 3 when it makes sense on what you're looking at. Okay, sometimes we get a wave 3 forming in a correction because you've had either a longer than 144 price bar correction and it's looking at the most current impulsive wave even in that correction, which could be part of C wave or A wave. All right, so in this case here, nice clear Elliott wave 3. So again, connecting the dots. All right, it looks like you had an A, B, C here, correction to the downside, and that would be 4. And we've got a couple pyramids coming up. We got a down one and an up one, goes a little higher. That up one will be resolved to the upside. And if that's the case on a green here, that's a nice place for a long trade. And you can put your pyramid or your stop under the pyramid when that forms. And then the target is 195 based on a fib extension to 265. So that's kind of what we're thinking on that. If you're trading more aggressively and you want to get in even on a long-term trade based on the daily chart, you had all the signals already here, okay? And some people like to trade even the 60-minute chart. All right, but again, if you want to be in this all the way up to this target zone, all right, you don't want to use all the pyramids on the daily. You kind of want to use, you know, be very reluctant and careful about putting the stops in place because you don't want to get stopped out on normal pullbacks of inflection. Okay, so keep that in mind. That's kind of important along that. So Amazon would like. Another one that's very similar to this one, Jeff, you're right, is Google, okay? So Google's another one, okay? And we like Google a lot. And let me just type it in over here. All right, so Google, very similar to Amazon, except it's a little further along in its wave 5 movement. Okay, so here's your 3 here. All right, your ABC 4, and now you're up on 5. Okay, so when you look at these, it's very easy to connect the dots on these. Okay, this makes sense. This makes sense. This makes sense. This makes sense. This retraced correctly to a fib retracement level, which I've removed those levels, but it did. And now it's coming up, and we've got some pyramids. We have the wave 4 owl. You have to have a negative wave 4 owl for the wave 4 on that time frame, and then it's moving up. So that's clear. Okay, that's the kind of trades you want to look for. If you look and you have the lower time frame supporting a long trade. So when you get to a market that's really messy, all right, somebody gives me a symbol and it's messy, why trade that? Why would you bother with that when you can look at something and find something with more clarity that gives you more certainty? Okay, so always remember that. And usually if it's unclear on the higher time frame, it means it's probably in some form of correction on the higher time frame. And that's what's causing the sloppiness on the time frames you're looking at. And sometimes you have to wait that out until things become more clear, especially in day trading. When you see day trading, for example, in our day trading rooms, a lot of times, by the time the room opens, the trend will be done and it'll be very sloppy. And sometimes we have to wait quite a bit of time before that sloppiness takes on some type of cohesion that makes it into an identifiable trading pattern. Okay, so that is something that happens on all time frames as well. And if you go out long enough on the time frames, you can eventually see a more clear Elliott wave. But depending on the time frame you're looking at, it may be useless to do that because your time frame may be so low that you're going to be more focused on what's happening in those intermediate time frames around your primary time frame versus a longer term issue. Okay, so keep that in mind. So basically, if I can't see the pattern in the 3 time frames I've chosen, all right, I just move on, okay, or don't trade it. All right, anything else? Was that helpful with the inflection points? That's kind of what I want to cover today to make sure we got it. Okay, good. All right, David, excellent. Thank you. All right, so all our analysis on the market, we usually handle, Stephen, through our subscription services. So that kind of thing we really don't do in the client support. Sorry. It's not fair to the people that pay money for those subscription services to do that. And the ES is the S&P, so that would represent a major index. Oh, Microsoft. Okay, we can look up Microsoft. That I can certainly do. All right, let's take a look at Microsoft on the long-term charts. And again, kind of good and clear, isn't it? Okay, so here's your 3, here's your 4, a little bit of a shallow 4, and now going into 5. Now, the interesting thing, as long as it hits the target zone, because 70% of the time, they do hit the target zone area here. So the deal is with that, is that if you get a shallow bottom, you're going to get a higher wave 5. And it makes sense because that's how you're going to draw the fibs, right? So that's usually, but we do like it to go into that target zone. When it doesn't reach the target zone and ends in this red area, we cut the trade size by half because there's a very big possibility that the bottom's not in. So 70% of the time, wave 4s end in this target zone, provided you kind of draw them the way we teach you to draw them, right? So 3, 4. Now, what's very interesting about this is a pretty high owl. Has not exceeded the owl here. So kind of interesting. We're going to keep an eye on that. So if it exceeds the high of this owl here, then that means that this is not a 5 per se. This is still a wave 3, and this is a minor 4 inside the 3. So we'll have to keep an eye on that. But usually that doesn't happen. Okay, usually you have the bearish divergence. You'll probably have a pullback, which will lower this thing and never have it go above here, even when it goes back up. All right, so that's kind of what usually happens. But again, connect the dots. 3, 4, okay. This makes sense, this makes sense, this makes sense. You've got this as well, the PTF, which has a 75% accuracy rate, indicating we're going to get above here, which would make sense for a wave 5 high into that target of 414 to 534. So Microsoft really looks good for you, and the lower time frames, of course, are supporting a bullish move at this point. Now, I will say you're starting to get a little bit extended on this move up, so you'll probably get some type of pullback. So again, if you're trying to make it to the target zone, don't use this pyramid, and I wouldn't use this one, all right? Because let's take a look at the inflection point. You're gonna get a pullback at least to here, just under normal circumstances of the market breathing, you know, that profit taking, moving forward. So you kind of want to keep your stop under here, okay? And that should hopefully keep you in. And if you really want to be conservative, use the pyramids, okay, on this one here, but not this one, because you haven't really had that much of a significant pullback yet. So I would be very, very cautious in moving my stop up too much, because the volatility on the next pullback could take you out, and it would be just a normal breath in the market before it resumes back to the upside. So Microsoft, very bullish on, have been for quite some time. It's a good one, okay? It's right up there with Amazon and Google. Now, let's see what else. What else can we look at? Anybody have any other ones? So I think clarity is a big thing. If you can look at a market and the Elliott wave jumps out at you, then that's the right market. If you look at a market and you kind of have to scratch your head for a minute or two to figure it out, that's probably not the right market. And it requires you to not only scan for the setups, but also go to the chart and see where you are, okay, in the Elliott wave, and look for those ones that are clear. And you know, it will cause you to have to thumb through a lot of markets to find those perfect ones. You know, the scanners are designed to help you do that quicker, but you're still going to have to go through them. All right. Any last minute questions? I like to keep these to about a half an hour, because I know everybody is busy, and it is market hours. And so I kind of wanted to, I like to keep them to about a half an hour, but we're here every Wednesday. So if you have any of our software or our educational classes and you have a question, this is the place you want to come to get those answered. I'm more than happy to help you with that. All right. Well, I think that's going to be it for today. Again, don't forget, Oracle subscribers, and there's many of you here that are, we'll see you this afternoon at 2 o'clock, and we'll go over the markets and tell you exactly what we think is going to happen over the next several weeks, and as well as where we think the market's heading over the next year. So definitely don't miss that. All right. Thank you, everybody. Have a good one, and we'll see you back here next week.